since February 2025, average prices have gone up between 1% and 3% per month. And sales have gone up by double digits. We're close to 11 or 12%. Yeah, so it is a record number of listings right now. It's if you monitor the data, it's quite interesting. But I think the reason for this is that seller confidence has returned, but buyer confidence hasn't matched that.
Real estate is a household topic, and with so many things available to you on social media, how do you decide as a family what's accurate and what's not? And with your best and most important financial decision, you deserve to have the right data, and that is the point of today's episode. We will be doing a live podcast with the real estate expert to give you the real data and facts so then you can make an informed decision. Let's go check it out. Ricky, thank you so much for joining us today, buddy.
Pleasure. Thank you for having me.
Honestly, it's our pleasure because real estate is one of those topics that is so hot, always has been. But I think now more than ever before, as a team, as personal individuals, and even through the surveys that we're doing, there are so many questions that we want answers to. So many concerns and situations that we want your advice on how you would tackle them. But more specifically, we want you to debunk some of these myths that are going around in social media. Right? And social media is a powerful tool. Unfortunately, whenever something's put out there, people believe it, but we want real data from you. We want real facts from you, right? So I'm gonna dive into it right away. One of the more common questions that we're getting right now through our surveys is, why are there so many listings on the market right now? A record number is what we're getting told.
Yeah, so it is a record number of listings right now. It's if you monitor the data, it's quite interesting. But I think the reason for this is that seller confidence has returned, but buyer confidence hasn't matched that. And so you're seeing more listings on the market. If you look at the interest rates and where we are now, the last time we had interest rates with the Bank of Canada this low was 2022. So sellers now are racing to get their property listed so that they can cash out if they have an opportunity now. Versus buyers are still looking at it very cautiously, but cautiously optimistically, because there are opportunities in the market. But because of what's happening in the world right now, the geopolitical landscape and everything else that's going on, they're still cautious, very cautious. And then the other part of it is the condo segment and the investor segment. So a lot of the investors are exiting the market because the numbers don't make any sense right now. And then you've got further issues that are kind of surmounting with the landlord tenancy board and the delays in dealing with matters. And so cautious investors are looking at the market space and saying, well, this might not be the time to invest, although there are transactions that are very opportunistic right now. But between that and I think the overall spectrum, people are a little bit unnerved right now. So you're seeing sellers enter the market because they want to cash out if they can. Buyers just haven't kept up pace.
Sure. So let's break that down a little bit and let's get a little bit deeper into what is it specifically within the buyer sentiment that's making them a little bit more hesitant to buy real estate. Years ago, real estate was the goal, probably still is, but it was very quick. People wanted to be in the market.
Yeah.
What specific factors are preventing them from being as quick in this decision now?
I think a lot of it has to do with uncertainty. And I think there's that sentiment too, that if I buy now, although I see an opportunity, what if there's another dip? Right? And so I think that's where the education really comes in, because if you're planning on buying and flipping next year, not a good move. Probably don't want to do that. But if you buy a property now, you're going to live in it, maybe offset some of the expenses using a rental, right? If you've got a secondary unit or whatever it is, you rent out a couple of the bedrooms, some strategies like that. Well, then as long as you're hanging on to that property for 5 to 10 years, there isn't any 10-year period, as far as I'm aware, where properties haven't rebounded. Right?
Sure.
So it's a long-term game, and I think that's what it comes down to. But I think if I'm a buyer and I'm looking at the current landscape, I'm thinking, well, what if the prices drop another 100K? Is it likely? I don't think so. If you look at the year-over-year numbers, and this is going into what you said about social media, year-over-year, the stories is that we're down double digits. Number of sales, prices are down, everything's down, down, down. But if you track the data forward-looking, since February 2025, average prices have gone up between 1% and 3% per month. And sales have gone up by double digits. We're close to 11 or 12%. And so that tells you, for somebody that's forward looking, that the opportunities may start dwindling because buyers are coming back now, right?
Sure.
But the geopolitical landscape right now is creating a lot of uncertainty. So between tariffs and between everything else that's happening in the East right now, people are unnerved. And so it's like, okay, if I'm renting now or I'm living with my parents, maybe I ride it out until things get better. But the challenge with that is that when you feel that way, everybody else is going to feel that way.
Sure.
So the people that take that risk, and in my opinion, it's not a risk, as long as you're going to live in that property, you won't lose. But if the goal is to buy it and flip it, yeah, you might have some challenges with that. That's not something I would advocate for.
I think it's entirely possible that during the COVID time, it became normalized to buy real estate, sell it within a year to get rich quick. I'm gonna put that in quotations. Whereas that never really was the housing goal. It was always a long-term game. That's what we were originally taught. That's what we always read. And it seems to be coming back to that. Right? And a lot of people are buying real estate to get rich quick per se again, but now they're buying it for their family, for their future, and all the right reasons to get into the housing market, right? Well, how many months of inventory do we have right now?
It depends on the market that you're looking at, right? So for the markets that we track in our weekly market updates, we're looking at about 3.5 to 4 months of inventory.
Sure.
And so for the people that are watching, you've got 0 to 4 months of inventory, which is a seller's market. 5 to 6 months of inventory is a balanced market. 6+ months of inventory is a buyer's market. So for the markets that we're monitoring in the GTA, obviously if you look at Canada as a whole, it doesn't look so great. But if you look at micro markets within the GTA, there's a ton of opportunities, right? And even with listing strategies, when you look at it now, if you've got 57 other properties listed in your community, yeah, it's going to be a challenge. But if you've got 5 or not so many, if you price strategically, you make sure your property looks well, you're going to sell. Like that's why we're seeing since February an uptick in the average price, single digits, but still up, which is great. And sales up double digits, almost 10 to 11%, which is very positive. It's a trend. It's an upwards trend that's visible right now.
And this is very refreshing to hear because all we see is the negativity that we're down. That's all that's kind of going around and circulating through social media right now. But it's nice to know there is actual genuine data that's accurate and it is optimistic. Can we just circle back really quickly? Can you break down what the term month of inventory means?
Yeah, so months of inventory means that if no new properties were listed and you just had the existing inventory, how long would it take for that inventory to be depleted entirely?
Sure. And the way things are going right now, how long do you think it would potentially take? And I'm not going to quote you on this or hold you against it, just from your experience, for the buyer demand to potentially match the number of listings, which is likely growing day by day.
Yeah, so let's look at, you mentioned COVID, so let's look at why that happened. Like
Sure.
why, not why COVID happened, but why people rushed to the market. Well, money was free.
Sure.
Right? And so you looked at the opportunities between GICs, private lending, investments in stocks with uncertainty there. You look at everything. If money in terms of lending was at 0.25%, you could go to the bank, qualify reasonably, get a pretty good deal. And so it's all about what consumers are perceiving. Back then we had COVID, but we didn't have geopolitical uncertainty to the extent that we have today. We didn't have tariffs and these things to kind of worry about that create a lot of uncertainty. And so when money's cheap, naturally, if you're a buyer, you're looking to upsize or whatever you're looking to do, the opportunities are there and it's affordable, it's within reach. Versus when the interest rates are at 5%, I mean, that's a different ball game, right? Then you're moving and maneuvering that market because you kind of have to, or because again, you're a long-term mindset and you're acquiring that asset based on the fact that down the road, you're going to be just fine.
Sure. Let's shift the segment a little bit. And I have a lot of loaded questions to ask you, so we'll just go one at a time, right? A recent study that we read shows us that 28% of tenants right now in today's real estate market, they are now actively wanting to buy their own condo or freehold property within the next 12 to 24 months. My question is, for one, do you think that's an accurate number? And then for two, what do you think is triggering that type of thought process and move to go from renting to home ownership?
So I think the number may be accurate. I think overall sentiment, I mean, it's a cultural milestone, if I can call it that, right? Owning a home is, for most people, it's like I've kind of made it. I've done something, especially when you look at Canada. I mean, we're immigrant based, right? So to come to this country, acquire an asset, it's a cultural milestone. It's a big deal, right? I think why more tenants in this market are looking to maybe to pivot is a couple of things. So first off, if money's cheaper, it makes it more affordable, right? The second thing is that there's a lot of uncertainty when you're dealing with a landlord. Yeah, you've got a lease, you've got rights. I mean, landlord has rights too, but the reality is that rents can go up, and they will, right? They continue to go up year over year, especially if the landlord's making those increases. Right? We have rent control versus non-rent control property, so it depends on the kind of asset you enter into. But overall, if it's affordable for you and you see that there's opportunities in the market now, and it's a good move for either yourself as an individual or for your family unit, I mean, this is a time. Having your own home means that there's no uncertainty from that perspective.
Sure.
Right?
And you get to build equity.
Sure.
Eventually pay it off.
Yeah.
And then that could be an investment property for you as well, right?
Yeah. And then you've got reinvestment potential, right? So a lot of people that have owned properties, for the last decade or 2 decades, they've got equity that they're now using to pay off bad debts. If they've accrued bad debts, they're using that money to then go out and buy investment properties or other properties.
Sure.
Right? If you look at the average immigrant, I mean, the story that you'll hear when you talk to the average immigrant is that if they've been in this country long enough, they've got 3, 4, 5, 6 assets in some instances, right? Depending on what their motivation is and their feelings are towards scaling in this economy in this country.
Got it. Thank you for sharing that. So something you said just now, it triggered something that we saw in our research, and I want to get your clarity on it. The studies that we're seeing are showing us that rent is going down. And I don't mean studies, I mean we're seeing social media postings that rents are going down. I think the number that we read was 8 consecutive months. And you mentioned that the rents will likely be going up again. Break that down for me. Break that thought process down for me.
Yeah, so to clarify, if you rented a property last year that's rent controlled, your landlord can still increase the rent by that amount that's prescribed. So it's marginal, but over 5 or 10 years, that adds up. You're paying somebody else's mortgage is what you're doing.
Sure.
And so with every year that goes by, the rents will keep going up if the landlord continues to do that. Now, a lot of tenants will look at that and say, okay, fine, you're going to increase my rent, I'm going to leave. But then you break that down, it's like, well, I got to find another property. It may or may not be rent controlled. I have to move. I have to uproot my kids from their school if that's the case. So there's a lot of factors that kind of go into that thought process. So it's easy to say, I'm gonna get up and leave if you increase my rent. But it's a lot easier to say than it is to do for most people.
Sure.
And then the other side of it is that the properties that are not rent controlled, I mean, some of those landlords are making deals, right? Or they're not increasing the rent by $300 a month. They're being reasonable because as a landlord, if there's 27 other properties that are like yours in the same area, you don't want to have a vacancy. And so there's an interesting shift in terms of the bargaining power between the parties.
Sure.
Right. So understanding the Residential Tenancies Act and what you can do as a landlord or tenant, you have to be careful not to break the law, but there's opportunities there depending on how much you want to do and not do.
Yeah, got it. And I'm about to ask you a question, but then the floor is all yours because this is a loaded question. And for now, for the sake of this question, we'll just focus on the resale aspect of this market. What is happening in the Toronto real estate market for condos, Toronto downtown condos? What is going on there, and what do you forecast happening within that market over the next 5 years?
Okay, so to understand the condo market, you have to understand how we got here. How we got here is in 2020, 2021, 2022, we sold about 50,000 high-rise units, okay? Those units are all now ready for occupancy and closing. And so all of that inventory is hitting the marketplace now. When you look at the occupancy fees, you look at the rates, you look at the rentals, most investors are negative cash flow right now. But they don't have an option because if you hit the market to sell, and that's why we're seeing an influx in the amount of inventory, people are trying to sell, but it's not really working out. So oftentimes the landlord's out of pocket after paying, for example, maintenance, taxes, insurance, and all of the other stuff that goes into owning an investment. You're negative on a cash flow perspective. And so the landlords are now kind of torn because you can't offload the asset without taking a huge hit. And you see that some of those landlords that have that appetite, they're assigning their units even before they have to close if they're able to. And I've seen at my law office, people walk away from $200,000 in deposits just to make sure that they don't have to close. And that's a cost of doing business as far as they're concerned, right? So you've got this landscape now where this is happening. But I think the other part of the picture that a lot of people are missing, so 2020, 2021, 2022, 50,000 units, those are all coming up now. 2023, 2024, we sold collaboratively like 15,000 units. What we really sold is zero. Why? Because all of the units that have been sold, the 4,000 and change last year, the 11,000 and change the year before, none of those are actually going to be developed because most of those builders, unless you're loaded, they don't have 400 million laying around to just put up a concrete building. And so the reality is that although we've sold 15,000 units in 2 years, none of those are going to get constructed. None of those builders are going to obtain financing. And there's less of an incentive to bring those units to the market now. So projects are getting canceled. And we see that happening, right? Where we've sold things and now we get notification that the unit's canceled or whatever it is. So that is an interesting reality. And what happens now is that this inventory that's hitting the market will get absorbed. By 2026, 2027, it'll get absorbed. But by 2028, 2029, we're going to hit a cliff because we're undersupplied. Right? Statistically speaking, from what I know and what I've heard, and I listen to all kinds of people talk about these topics, by 2030, we're 5 million homes short. Keep in mind that 1970s was our peak building in this country. Now we've pared down the actual immigration numbers as well. So we're not bringing in as many people. The 1.2 million people that entered this country in the last couple of years is what kept everything afloat. So that's being pared down a little bit, not it's not insignificant, but these would-be condo investors were banking on the immigration to occupy those units.
Sure.
So that's the practical reality. But come 2028, 2029, 2030, there's no new inventory hitting the market. And so a lot of the investors that we're coaching were saying, look, I know it looks bad now, but let's look at the data down the road. There's no more inventory that's going to come to the market in those years. Maybe that's when you'll make a bit of a recovery. So you might be out of pocket, say, let's say $1,500 a month. Let's call it 20 grand a year.
Sure.
For a couple of years, that's 60 or 70,000, even 100,000. But if you can hang on and that investment, you bought it at a reasonable price, you'll be able to recover that in the next decade.
Do you think it'll be more so of a recovery of the costs put to carry the property? There could be profit in the sites as well.
It depends, right? I think it all depends on what's happening in the marketplace. I mean, Canada's all immigration, right? We're all here. We're like, I'm a kid of an immigrant, right? My family came from a different country and we immigrated here for opportunity. And so more and more people look at Canada on a geopolitical spectrum. We're seen as a very safe country. And so a lot of people will come to this country. And if you look at the data, for every one Canadian that comes to Canada, the US takes 6.
Okay.
They don't have the kind of housing crisis we have. So we know as a country, we know from the political spectrum that there's a housing shortage. And so when the taps start flowing again and things are better and all of the stuff that's happening on the geopolitical spectrum starts dwindling and kind of dissipating, then, I mean, people are going to look at it, and I think in a different way.
Let's break this down a little bit more. But let's pivot a little bit. During the elections, and we know now Liberals have won, the most common concern that we were getting when we were canvassing was housing, more specifically affordability. And the ratios were varying. There were many people that said that their housing costs are 80% of their earnings. Some said it's more than 50% of their earnings, minimum 30% of their earnings. How do you think, if at all, it is possible to change this? Do you think the Liberal government has a plan in place that could tackle this head on?
I think it's a start, right? At least we're talking about it now. I think that's the main thing. Going back to the data, 1970s was our peak building. Now, because things have slowed down, you have the trades and the people to start building, but nobody has the capital to start investing right now. So it's challenging because although the government makes it easier by clearing some of the red tape and some of the timelines, it starts shrinking. The reality is that if I'm a condo developer, I don't know if I want to develop in this market. So you have to create incentives for them as well, right? So overall, I think there's steps in the right direction. You look at the GST, HST that they're trying to clear up to 1.3 million, they're trying to waive that. A lot of people don't realize that only applies to pre-construction. It doesn't apply to resale. And so there's this kind of connotation right now with pre-construction, especially with the media headlines and what's happening on social media, that you don't touch pre-construction, but there are opportunities. So you need a good agent to kind of look through what's happening and try to help you find a project that makes financial sense for you and also makes long-term sense for you and your family if you have a family, so that you can do what you got to do in the community. We're on the right track. We need to speed up timelines. We need to bring in the people to build these properties, the trades, and we need to make it easier for developers to look at the investment and say, this makes a lot of sense for me, right? I want to put up a 400 unit condominium building and I'll see a return on investment at the end of it. You have to make it easier for people to want to do that. And that's how you're going to deal with the supply issue.
So Ricky, if everything that we've spoken about today, it's quite evident that there's a lot of opportunity out there. But regardless of that, consumers are still scared or afraid or worried to buy real estate. Why is that? Can you break that down?
So I would say, Moez, that's because consumers are financially stretched and psychologically cautious right now. If you look at the inflation numbers on paper, they look good, but essentials and the cost of essentials is still pretty high right now. Then you've got what's happening with tariffs and the geopolitical spectrum and everything else happening in the world right now. And I think the biggest thing is that if I'm a buyer and I see an opportunity now, I'm thinking, well, maybe prices continue to dip further. Maybe something shifts further. So because of that, I think people are holding off. But the data supports that, and you can see this in any kind of historical data as well. When everything starts aligning, everybody jumps into the market and it drives things to a different level.
Right.
So for those that are interested in pursuing real estate right now and there's an opportunity, if you're going to hang on to the property for 5 to 10 years, likely you'll be okay. If you've bought the right type of property in the right community in the right area, you'll be just fine. But I think that's a part of what it is. Inflation still is hurting. You can feel it at the grocery stores. You can feel it in other parts of your life. Uncertainty is challenging right now, and people just don't want to make a mistake.
That makes sense. And I'm glad you broke it down the way you did, not just stats, but you also related it to the actual consumer. And I'm really hoping the viewers that watch this get tremendous amounts of value from it, right? Now, Ricky, I know you for a very long time, but for the ones that have not had the pleasure to meet you yet, tell us a little bit about yourself, but dive deeper from your early 20s to now and everything you've accomplished. How did that all come together?
It's all fluke. It's all luck. Truthfully, right? So I got into real estate because my dad woke up one morning. I was 18. He's like, we need to buy, we need to sell. I don't have time to do these courses. I need to put food on the table. You figure it out. So I went out and I did the courses, and it was really to help my family. What I realize now, hindsight's 2020, he was just trying to keep me busy. He wanted me out of the wrong circles and the wrong track. So his goal was, if this kid worked 3 jobs a day, college and university, plus real estate, maybe there's no time to screw around. So that's how it started. First year, somehow sold 40 condo units, pre-construction, made very good money. And then I started looking at it differently. Because growing up in a South Asian household, it was doctor, lawyer, engineer. The track was to get into law school if I could. But when this kind of kicked off the way it did, it turned into something that I became passionate about, not just because of the financial stability it brought, but because I could see that I was making a meaningful difference in the lives of others, right? I'll give you a simple example. Like when I started my employment prospects, I used to deliver packages all over the GTA, all over Ontario, in fact. And the reason I was really good at it is because I had the GPS when the other people at the warehouse didn't. And so I found ways like that to excel in real estate and do things for clients that other agents may not have been able to do because they weren't willing to change the way I was willing to change and adapt. So that led to one thing. Eventually, I became a mortgage agent because I didn't understand the financing of it. And clients would ask me technical questions, and I didn't want to mislead them or misguide them. But I also, being 18 at that age, 18 to 20, mid 20s, early 20s, I didn't want to look incompetent or not have answers because, again, when you're a younger agent, people are already kind of unnerved about dealing with somebody that doesn't have experience. So the education was kind of my sword and shield in that. It prevented people from thinking I was incompetent. Eventually, I became a real estate broker, not because I wanted to open up a brokerage, but because I felt that having a broker title on my card would mean, again, seniority, experience, and the things that I was looking for. I just couldn't grow the gray hair, which I'm finally growing now. And then eventually, I got into law school. I opened up my law practice, and I started my first real estate brokerage to look for tax shelters that were meaningful, right? When I started in 2013, professional real estate corporations were not an option. You couldn't retain your earnings and do anything like that. And so the only option I had was either to dial down or start a company and then do my own transactions and retain the earnings. So it was more of an accounting strategy that was employed, which I may or may not have needed. But because of the different hats I was wearing, I ended up meeting with a lot of very interesting people that came and started working with me as a part of the team. And then from there, eventually, when the market shifted, because we were an independent non-franchise, we saw an opportunity to scale further and take the business to another level in partnership with Remax. So that's the long story short. Here we are today.
It might have sounded like a short story, but we know very well that's a long process. And I can only imagine the amount of commitment that goes into it. Yeah. And maybe one day we'll do a podcast just on your life to inspire other entrepreneurs, to show them what can be achieved from a very young age. I know I've looked up to you and so many other people in the community look up to you as well. So maybe we'll do that at a later time. But for anyone watching this right now, they want your real estate advice or they want to talk to you about their transaction. How can they get a hold of you? Where can they follow you on social media?
Yeah, get in touch with me. I'm all over social media, LinkedIn, TikTok, Instagram, Facebook. Search my name on Google. The first 3 pages is all me. Very nice. Easy to get in touch with me. And we're happy to help with anything that you need, whether it's real estate or legal or anything that's related. We're here to assist in any way we can.
A personal question, Ricky. Do you think this suit is too bright?
No.
Okay.
I think it's great. It looks fantastic.
I appreciate that. And to our viewers, as always, thank you so much for watching. If you have any questions that you would like for us to ask Ricky in the next podcast episode, let us know in the comments below. As always, like, share, and subscribe, and inshallah, we'll see you in the next episode.